Good afternoon. From the floor of the CME, this is Chris Robinson with your Traders Exclusive comment for today, Thursday, the 18th, the day before Good Friday. And obviously, it's been a short week, and there's been some movement out there in the grains. So we'll start with the grains and finish with cotton and copper. It's kind of the China trade, right? What's going on there? So we got to start with the grains. Some continued pressure from, I guess you want to call it the big short, right? The big short managed money has got a record short corn position, probably a little over 270,000 contracts. We will get a new commitment to traders, I believe Monday, because we're closed tomorrow. I don't know if they'll post it or not, but every Friday they release the positions of the big players, commercials, managed money, and it's as of the previous Tuesday. However, really for the past 4 or 5 weeks, we've watched the managed money build a big short position in corn, wheat, and beans. Short 280,000 contracts of corn. That's roughly 10% of the crop. Short 100,000 contracts in soybeans. Again, give or take 10% of the crop. And then in the wheat, they're short about 50 or 60,000 contracts in Chicago, 50 or 60,000 contracts in Kansas City, and also a little bit short in Minneapolis, which is spring wheat. And as of now, they've had no reason to cover those shorts. We haven't had an issue from Mother Nature, we haven't had an issue from demand, and we haven't had an issue with a resolution to this China deal. All three of those things could be the trigger to spike a higher move. Now, that's the thing. The rubber band's getting stretched really, really far. Could it continue to go? Absolutely. I don't know. It could be like Stretch Armstrong from when you were a kid. You could stretch that thing pretty far. But sooner or later, history as a teacher will have a snapback. So that's what the bulls are looking for. That's what the bottom fishers are looking for. We're not going to get new information from the USDA until May 10th. So the next 2 or 3 weeks, we're probably going to be trading off of other news. Obviously, the big factor is, can we get a deal cut with China? Overall, the markets are very, very oversold. We've got corn within a penny or two of testing its contract low in the spot month. You have soybeans really towards the bottom of almost a 7-month, 70-cent trading range. And you've got wheat also, it's trying to fight off the bottom. We did have a 50-cent rally a couple weeks ago, but we've given a chunk of that back. So the market's trying to carve out a bottom. There just has been no fuel on that bullish fire. Maybe that'll change in the next 2-3 weeks. I'm going to finish up with a China trade. Cotton and copper. We saw this week, in the middle of the week, we had better than expected growth in China, a little over 6.5%, 6.4%, I believe. So that was considered bullish news. And typically, copper is kind of a bellwether for what's going on in China because they use so much copper and they also produce so much copper. What's interesting is we went up and made a new 9-month high, and then immediately the market kept in, and a lot of people sold the fact. So kind of buy the rumor, sell the fact. We're still stuck in kind of a sideways trading range. If you pull up a big long-term chart of copper, please do that. Longer term, we are right in the middle of a pretty good trading range. This area right around 3 cents. Again, we see that lots of times in all the markets. The markets will have a big move and it'll come back to right in the halfway point. Why is that? I believe it's just because it gives both bulls and bears a chance to decide, well, we're not on the highs, we're not on the lows. Here's your chance to either reload or get out of your trade. But you see that time and time again. So I would watch that 3-cent level in copper very, very closely. And then you have to look at what's going on in cotton. Cotton was also kind of, just last week at a 4-month high. And you would have thought that with a better news in China, better growth in China, more demand possibly for our cotton. And again, what happened? The market kind of stepped in and sold it. So you'll see that quite a bit, or the market will rally on good news, but then if there's no follow through, a lot of people get out very, very quickly. So I would continue to look for cotton and copper to present good opportunities if you're looking for movement. Keep an eye on those two contracts. Certainly, if the day we get a China deal, I would imagine there's going to be some pretty volatile trade in cotton and copper. So that's about it. Have a great Easter weekend. If you're looking for help, please look me up, Chris Robinson, the Cow Guy Group through TJM. We handle a lot of not only institutional investors, but also we handle a lot of producers, end users. If you're looking for hedge advice, please look us up. Have a great day.